Starbucks is the company that many companies want to be. At least, that's how it has always been. But now, everything is changing. From dwindling profits to lower foot traffic and a CEO whose strategy is being largely scrutinized and critiqued, Starbucks is in big trouble now. The signs were there. In December last year, Daniel Klein of The Street wrote that Starbucks had a budding problem that he described as bigger than McDonald's. At that time, no one seemed to be picking up on what he was seeing, but time and happenings are now proving it true. The chain recorded a modest 9% increase in same-store sales in the United States during its 2023 fiscal year. About 5% of this growth stemmed from higher average transactions, likely due to price increases. However, there were indications that the chain was losing some of its audience. Customer traffic dipped in November 2023, as per Placer.ai data. In previous years, 2020, 2021 and 2022, daily visits during Red Cup Day surged by 74.4%, 65.0% and 81.0% respectively, compared to the average daily visits in the 5 weeks before Red Cup Day each year. In contrast, the 2023 Red Cup Day saw a 31.7% increase over the previous 5-week average, still notable but not as significant as in prior years. While these results may have seemed insignificant as individual data points, they hinted at a larger trend. Visits during the week of Red Cup Day, November 13-19, were 16.1% lower than the same week in 2022. Moreover, visits in the week following the holiday menu release dropped by 3.4% year-over-year, suggesting reduced demand for holiday beverages in 2023, as per Placer.ai's analysis. Klein said you could blame inflation, the economy, and increased competition, but insisted that that was not why Starbucks shareholders should be worried. He said all of those things could play a factor, but stated that Starbucks' problem was CEO Laxman Narasimhan. He explained further, while some critique Howard Schultz's handling of labor issues during his tenure as Starbucks CEO, his expertise in coffee is undeniable. Schultz may not have been the company's founder, but under his leadership, Starbucks evolved from a coffee roaster and bean seller to a US version of an Italian coffee house, with its locations becoming a third place for customers between work and home. Schultz emphasized coffee as the core of the brand's experience, always prioritizing its quality and role in the chain's identity. In contrast, Narasimhan lacks a coffee background, but brings substantial operations expertise to the table. However, the essence of the coffeehouse experience goes beyond efficient operations. It's about creating a connection with customers that makes Starbucks a part of their daily routine. While operational efficiency is important, it's the combination of great coffee and an exceptional overall experience that keeps customers coming back for more. Klein wrote, "In the immediate future, Starbucks' biggest problem is that its CEO has spearheaded a new revitalization strategy that pretty much never mentions coffee. It's a passionless creed that feels like it was the product of consultants, not a CEO who keeps track of coffee culture around the world." Barely a few months after Klein's article was published, Starbucks is on the bridge of the worst crash since the dot-com. A big crash underway. During the early cash session, Starbucks saw a significant 16% drop in its shares, nearing the 16.2% level last observed during the COVID crash. Should intraday losses exceed 16.2% and persist above this threshold at closing, it would mark the company's most substantial single-day decline since the dot-com crash in the early 2000s. Analyst Adam Crisafulli from Vital Knowledge commented that Starbucks reported one of the worst sets of results among large companies this quarter. William Blair downgraded the coffee chain, citing a remarkable miss across all key metrics in the previous quarter. Starbucks' second quarter report showed a 4% decline in same-store sales compared to the same period last year, contrary to analysts' expectations of growth. In China, same-store sales plummeted by 11%, indicating a notable slowdown in consumer spending in the company's major geographical segments. During the earnings call with investors, CEO Laxman Narasimhan began by expressing his dissatisfaction with the performance. "Let me be clear from the beginning, our performance this quarter was disappointing and did not meet our expectations," Narasimhan said. During its Q2 2024 earnings call in late April, Starbucks disclosed a 2% decrease in net revenue, amounting to $8.6 billion, attributing this decline to a complex operating environment. Several factors have contributed to these results, but Narasimhan pointed out a notable trend among loyal customers who have downloaded the Starbucks app but are abandoning their orders before completing the purchase. Over 60% of Starbucks' morning business is generated from reward members who utilize the company's app, with many presumably accessing it during their commute and seeking their initial dose of caffeine. What's interesting, though, despite strong mobile order and pay sales, we saw a mid-teens % order incompletion rate within the order channel this past quarter, he added. In other words, customers using mobile order and pay sales put items into their cart and sometimes chose not to complete their order, citing long wait times of product and availability. The numbers translate to approximately 1 in 7 or 8 customers abandoning their orders due to the congestion at their specific Starbucks location. Narasimhan, eager to retain these customers, outlined several strategies the brand is employing to enhance efficiency and expedite the shopping experience. One initiative is the ongoing deployment of the Siren system, which is the world's second-largest restaurant chain's advanced drinks machine equipped with customized ice and milk dispensers, along with a set of blenders conveniently accessible to a single barista. These efficiency measures are complemented by efforts to improve supply availability, Narasimhan noted. Another reason customers choose not to complete their order is product availability, he explained. For example, our potato, cheddar, and chive bakes were a big hit with customers, but demand was so strong that we are currently only able to offer them in 2,000 of our US stores. The Seattle-based company is increasing its investments in the supply chain to ensure that its most popular products reach customers. Former Starbucks CEO Howard Schultz has suggested that company leaders should prioritize spending time in stores and focusing on coffee drinks to address declining sales. Schultz shared his thoughts in a LinkedIn post following Starbucks' recent disappointing quarterly sales and earnings. Known for transforming Starbucks into a global giant with nearly 39,000 stores worldwide since acquiring it in 1987, Schultz stepped down from the board last fall but remains its largest individual shareholder with shares valued at $1.5 billion. He emphasized the importance of senior leaders, including board members, engaging with baristas in Starbucks stores. "I have emphasized that the company's fix needs to begin at home. US operations are the primary reason for the company's fall from grace," he said. "The stores require a maniacal focus on the customer experience through the eyes of a merchant. The answer does not lie in data, but in the stores." Schultz's post indicated a hint of skepticism towards Narasimhan's turnaround strategies. During a recent conference call with investors, Narasimhan outlined plans for new products like boba drinks, sugar-free options, and Starbucks' inaugural energy beverage, anticipating they would attract more customers to stores later this year. However, Schultz emphasized the significance of coffee as the key differentiator for Starbucks, reinforcing the company's premium position in the market. "The go-to-market strategy needs to be overhauled and elevated with coffee-forward innovation," he said. Last month, Narasimhan unveiled plans for coffee pop-up stores in the US and other locations. These stores will serve as laboratories for experimenting with limited-edition coffee drinks, educating younger customers about coffee, and gathering insights into customer preferences. Schultz also recommended updating Starbucks' mobile ordering and payment platform to restore its original uplifting experience, although he didn't detail specific changes. Narasimhan had previously mentioned Starbucks' efforts to enhance its digital features and personalize the customer experience within the app, a strategy that began last fall. Responding to the LinkedIn post, Starbucks released a statement saying, "We always appreciate Howard's perspective. The challenges and opportunities he highlights are the ones we are focused on. And like Howard, we are confident in Starbucks' long-term success. Schultz has a track record of intervening during Starbucks' challenging periods. After retiring as CEO in 2000, he assumed the role of chairman and later returned as CEO in 2008 amidst the recession. He stepped down again in 2017, but temporarily resumed leadership in 2022. By 2023, he appointed Narasimhan, a former PepsiCo executive, as CEO. Schultz transitioned to chairman emeritus after leaving Starbucks board last fall. However, the company's stock has declined by over 20% since the year began. Do we expect the return of Schultz, or do we just trust Narasimhan to steer the company back on track? Long wait times at Starbucks have become more prevalent, particularly for cold drinks, now constituting 70% of all sales. However, these drinks often involve complex preparation, leading to extended wait times. Cold beverage builds are increasingly complex and time-consuming, and the surge in volume has caused bottlenecks in Starbucks stores, said John Culver, former Starbucks COO, in a release on the company's website. In August 2023, Rachel Ruggeri, the company's CFO, said, "From a siren system standpoint, we're in just the testing phase today, and we're on track to be able to launch in conjunction with our renovations in new stores next year." This is the 5th month of the year, and the anticipated siren system is still not in full operation. The updated siren system incorporates a custom ice dispenser, milk dispenser, and faster blenders, streamlining operations and reducing the manual tasks frequently performed by baristas, such as transporting ice buckets and jugs across the workspace. According to Starbucks, with the new system, crafting a grande mocha frappuccino could take a barista 36 seconds and involve 13 steps, compared to the usual 87 seconds and 16 steps. Additionally, a revamped process for cold brew preparation will enable baristas to create the drink in a matter of seconds instead of the current 20-hour time frame. The major issue now is that only 40% of stores are expected to have the siren system in 3 years' time. Meanwhile, Starbucks is on tethering on the edge already. While Starbucks aims to address issues like long wait times and product availability with initiatives like the